What's going on, everybody? Today we're talking about Disney, and I'm gonna tell you why, in my opinion, Disney Plus will become a lot bigger than Netflix. Yeah, you heard it first right here. Disney Plus will be a lot bigger than Netflix, in my opinion. Let's get started with the financials and find the fair value, the exact price of Disney stock, ticker symbol DIS. Let's go. So I'm Yao Finance, the summary page. Disney stock, this is what we're doing today. The Walt Disney price almost $200. I assume it will cross it in the next couple of days, as long as the market will get back to normal, because it's been down and down a lot lately. Look what we got. Market cap $350 billion. Okay, market cap $350 billion, 52-week range between $80 to 197. $80 was around the end of March, when everyone were in panic mode. People didn't know back then about Disney Plus. I don't think it was even a thing. It just started maybe like 6 months ago, and already the active user from Disney Plus is insane. And this is why I think the Disney Plus subscription is the game changer for Disney, not the theme parks. The theme parks will generate insane amount of money for forever, but the money that will come from subscription-based Disney Plus will suppress those people. Netflix right here, and you see Netflix is at $540. They were $590 like a month ago post earning, down 10% since then. And Disney just going up and up and up. We need to find the fair value according to the Buffett model that we have. Let's see what else we got in here. I don't have this one. I need this number for the earning per share for the Excel, -274. So let me show you where I'm finding this number, so you can do the same with your Excel. You go to the analysis tab right here, and you check first of all this one, the average estimate. Okay, average estimate of earning per share, and I'm looking for 2021. I'm not looking for next year, 2022. I'm looking for 2021. I'm putting this number. So they're going from a negative almost $3 earning per share last year in 2020 to a positive $2.05. And check out next year, almost $5 earning per share. This all, at least in my opinion, not all, but majority of the earning per share will come from Disney Plus. No one talks about it, and they should. People sleeping on Disney because they say, hey, theme parks are closed. I don't know if they're open. Probably in Florida. I haven't checked, but the real money machine for Disney Plus will come with the subscription base. So I'm getting this number in the Excel, 205. Okay, scroll down to growth estimate, and you check this one, next 5 years per annual. Look at this number, 48%. 48% growth in the next 5 years. Again, all Disney Plus related. Check up the last 5 years. In the last 5 years, there was no Disney Plus. They grew by 5% a year. That's very, that's solid for a mature blue chip company that have theme parks, that basically, and channel and stuff like that. And next 5 years, this is a blue chip that's gonna grow by 50% per year. Are you kidding me? That's insane growth. Look at this. Next quarter, 800% growth. Next year, 140% growth. This is like a startup. This is like an IPO. This is like electric vehicle IPO. The next year, 140%. That's insane. They're gonna grow by 48% per year for the next 5 years. And if you know me from my other videos, anything over 20% is, it's super hyperbolic growth. And this is Disney, $350 billion market cap. So they need to do 200% from here to become a $1 trillion market cap. Can they do it? Probably this decade, yeah, just my opinion. So I'm gonna put this number again, 48%, and the $2 that I found. Let's go to my Excel. That's the Excel, how to value a stock like Warren Buffett, the one that I made. Guys, you can grab a copy in the description below if you want to analyze any stock that you are interested in or have in your portfolio, as long as you have two positive things. Earning per share right here, I put 205. and the growth right here, that's what we found, 48%. As long as those two are positive, the rest are constant. 8.5 is constant, 2 is constant, 4.4 is constant. As long as you have those two positive, you're good to go, and you will find the fair value. In order to do so, in order to find the fair value of Disney stock and the price that we will be a buyer, I need to find the AAA bond yield for Disney. And before I do that, let's go over Disney stock financials to see where they want to focus on the financials on these two columns, because this column included the pandemic and this column includes Disney Plus. So in the pandemic time, they made revenue $65 billion. And with Disney Plus and all the theme parks are closed, as far as I know, I'm not sure, but doesn't really matter. The revenue is not from the theme park in this level. Basically, they added another $10 billion from 65 to $75 billion, most likely based on the subscription based. And if they're just gonna up the price for like $2-3 or something in a couple of months from now, and I'm sure they will, this revenue is gonna grow. I saw Netflix up my subscription from like, I don't know, $15 to $18.80, something like that last month, and that's, you know, it's insignificant for me, those $3 a month, but multiply that by hundreds upon hundreds of millions of subscribers, and you get tons and tons of revenue in the billion growth. Let's see what we got as far as the ratios that I like to see. So I'm gonna take my nice calculator, taking this number, gross profit 29 billion divided by total revenue 75 billion, and Buffett would like to see a 40% gross and up. That's healthy, so let's do that. 29,092 divided by 75,125, you got yourself a gross profit of 38.7%. That's 40%. That's upper level. 40% gross. You understand that this is a blue chip that operates in the levels of Apple. You gotta understand that. This is upper level. Apple is at 39, 30, yeah, something like that. Almost 40% growth. That's super amazing number. Let's see how much they get to keep. So you get this number. Look at this. The net income. Pandemic time, again, let's focus on pandemic time. Negative $3 billion. Okay, negative $3 billion. Last 12 months, Disney Plus, positive $10.5 billion. So they made, you subscribe this plus this, about $13 billion in the last 12 months. If you look at 2019, they made 11 billion, 2018, 12 billion, 2017, 9 billion. They made in the pandemic year more than they have made in 2019 or 2018 or 2017, of course 2020 alone, in 1 year. And Disney Plus is only beginning. People need to know this. Share this video to so many people that you like. Disney as a blue chip, they reinvented themselves with Disney Plus. This was a major game changer. So let's take this number and see the net ratio. You take the net again, 10,373, and you divide it by the total revenue, 75,125. Ideally you want to see 20% and up. I don't think it's doable just 1 year post pandemic. We got themselves a 14% net. This is pretty massive number, 14% net just in this year. And they started, I think, in the summer. Like Disney Plus has not been here maybe 6 months. 14% net. It's not 20%. It will be 20% if they will up the price for about $2-3 or have more subscribers. Basically this will be over 20%, and most likely Buffett will consider this according to these ratios in his portfolio. But this so far seems like amazing financials for Disney as a blue chip, and they're growing at a hyper growth rate like IPO startup company. That's pretty bullish in my eye. Let's move on. The balance sheet, I'm looking at the last year 2020, but only until the end of September, so I don't have Q4 results. Either way, total assets grew from 193 billion to 201 billion, another 8 billion. That's not bad. Let's look at the long-term debt, total liabilities, non-current liabilities, total long-term. we got this. So I'm taking this number, the 52 billion, and I'm dividing it by the net income, and I got the number of 5 years and a month. So basically it's gonna take them 5 years to repay their long-term debt, not including Q4. Ideally the number should be below 4, but I'm gonna give them a pass on that. This is pandemic, and this is only until September. I think that Disney Plus really got a lot of attention, a lot of subscribers in the last 3 months of the year, and keep growing and growing starting in 2021. So this number, 5 years to pay their long-term debt, will be below 4 years, probably when I do an update video a couple of months from now. But I'm very super bullish on Disney. Not a financial advice, just my opinion. Let's move on. Nothing special in the cash flow. We got issue of debt 38 billion, but they repay a debt of 38 billion, so they just refinance an old debt. That's fine. There was no buyback since 2018 when they did $3.5 billion. There's no diluted of shareholders. That's a good thing. So there's no issue of more shares. They just refinance. Let's say they took 38 billion at like, I don't know, 1%, and they refinance it for like 0.9%, something like that. Free cash flow took a beating from 3.5 billion to 500 million, most likely because the theme parks are closed, and correct me in the description below if I am wrong about that. But I don't think it includes the subscription-based Disney Plus just yet. It does, but basically the theme parks should generate insane amount of cash flow as well. And once this pandemic is over and people will go back to Disney World, because people worldwide wants to go to Disney World, the free cash flow will explode. So Disney in all are super bullish financials, super good financials. All we have to do is find the fair value of this great long-term stock, in my opinion. So last part, Disney corporate bond. This is what you Google. This is what we need to find. Let's see the results we got. This one is 0.47%. I think it's super low. Maturity in 6 months. That's the reason. This is 2%. Okay, I'm looking for something a little higher. 755, I think. No, they updated to 442, and this one has 4.5. Anything else? Okay, so this is 4.5, February 2021. This is the latest, and it seems normal size, 4.5. So this is the number that I'm gonna use. I'm not gonna use 0.47, it's too low. I'm not gonna use 755, it's insanely high. This is like junk bond level. 4.5%, that's the number that we're gonna put, so let's do that. Back in my Excel, I put the AAA bond yield right here, 4.5, and once I click enter, I'm gonna find the fair value of Disney stock, as well as the price that I will be a buyer, which is a 33% discount from the fair value. And before I do that, let me introduce myself. My name is Eve, also known as Finance After 40. Subscribe to this channel if you like it, hit the bell, check everything in the description below. I got a lot of nice great stuff, including this Excel where you can grab a copy for yourself and find the fair value of any stock that you are interested in. Now with that being said, let's find the fair value of Disney. So okay, interesting. Disney fair value $211. She's like 10% from here to the upside. And the price that Buffett will be a buyer is around 140, which was basically a couple of months ago. Okay, I assume this number doesn't reflect, because we did the finance. It's good, don't get me wrong, 211. I don't think people bought the 200. People start buying Disney at like 140, 160, something like that. 211 is the price that Disney is fairly valued according to this formula, and the price that we will be a buyer is 140. That being said, the financials that I went over only cover until the end of September, so I don't have Q1, and most likely once Q4 and Q1, once I have those, so a couple of months from now, I will probably do an update video, and this number will probably be a lot higher, because this earning per share 2 will probably be 3, 4, something like that, updated. And I don't know about the growth, but the earning per share will most likely change. But either way, this is what the formula brings out, not a home run every time. Check my other videos, Walmart, Tesla, all that good stuff. My conclusion from all of this, first of all, I do not have Q4 financials. I will definitely do an update video. That being said, you got Hulu, Disney Plus, ESPN, Disney, Pixar, Marvel, Star Wars, National Geographic, all for $6.99 a month. Super cheap compared to Netflix at $18.80, something like that, that I'm paying, start to pay last month, which is insane. If they up their prices like $3 from here, and I'm sure they will, not now, this is like a lunch price, like a year from now, it would go to $9.99. Their revenue and their earning per share will grow. You can watch this new movie, Disney Raya and the Last Dragon, Soul, Disney Pixar, and all those good stuff. And with that being said, guys, if I bring you any sort of value, subscribe, like, hit the bell, and leave a comment below which stock would you like me to do next. I appreciate you all. Mickey Mouse Clubhouse, this is not Elon Musk Clubhouse. Thank you. Comment below if you find this joke funny, and I will see you in the next video. Thank you guys. Bye bye.